Hello and a very warm welcome. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's begin with markets. To my left is Suyash Maheshwari. Suyash, a sea of red in the markets today, 0.5% down, both Sensex and Nifty.
Exactly, Shweta. Not a very good morning for the Indian markets. And, Indian markets opened in the red and they were down 0.5% on the back of mixed trend in global equities. Now, Sensex at open was down about 330 points of 0.5% or so and was below the 65,500 mark. Whereas Nifty was down about 106 points and it was below the 19,600 levels, which was seen as a very crucial support for the index, I mean, despite the fall, the overall breadth of the market was still favoring bulls. Around 1,300 shares were trading in the green this morning, whereas about only 926 shares were trading with declines, whereas 180 shares or so were trading, unchanged. The mid caps and the small caps on the other side is a completely different story. They were trading with moderate losses this morning, as you can see, but they have since recovered and they are trading flattish to positive. India VIX, Shweta, spiked up and it spiked up by about 7%. We, in the last few sessions, we have seen that the volatility has spiked up. First, it was because of the futures and options expiry. Now, it is because of the lack of cues, all of last week in the Indian markets, domestic cues were lacking for the Indian markets, whereas we were mostly reacting to, global headwinds about the crude oil, scaling a $97 barrel or $98 a barrel, the dollar index climbing to a year's high, and also the yields are, scaling a 16-year high. So after that, I think crude has cooled off significantly. I think it had corrected by about 2% or so last night, and
ending at about $92 a barrel,
90,
approximately.
yeah. So the last time I checked, Brent was around $90 mark, whereas WTI was hovering around $88 a barrel or so. And but the dollar index has continued to climb and it has scaled about 107 levels, which perhaps could be a dampener for the Indian markets. Now, talking about sectors, all the sectors barring FMCG were trading in the green. FMCG was flattish. It was up about 0.04% this morning. Whereas, among the laggards, Nifty Auto was the worst performing sector today. It was down about 0.9%. Other sectors, which were the major losers in the morning trade were pharma and metal. Now, remember, pharma and metal gained profits of about 2 to 2.5% in the Friday session. So perhaps you are seeing some sort of a profit booking taking place there. Both the indices were down about 0.8% or so this morning. Now, I think since the morning trade, the Nifty index has even broken down below the 19,500 mark, Shweta. It is down about 0.8%. And it is currently hovering around the 19,483 levels. Now, 19,500 was another level which the experts were saying will, provide support from here on, because if we saw the Nifty's rally from 19,250 to about 20,000, from 19,500 we saw a gap up opening. So there was a bit of void left over there where positions had not been set. So perhaps a break below 19,500 could drag the index, another 100 or 150 points. We'll get more cues from Mohit once he joins us.
Okay, I think he's here with us. Let's also quickly rope him in. Mohit Gang, co-founder and CEO of Moneyfront, with us this morning. Mohit, thank you so much for taking time out. It's going to be a shorter trading week. What's hurting the sentiments this morning? Is it global cues or is it the upcoming MPC? What, according to you, are dampening sentiments?
Oh, hi. Morning, Shweta and Suyash. Look, I think honestly, for the whole of month of September, the global cues have not been very favorable, not just for India, but for the whole emerging market pack per se. I think dollar index rising, the US 10-year yield shooting past 4.68, which is a new high again out there. And the overall global macros not being extremely favorable is kind of hurting emerging markets, though we can always make a case for India and say we will be a little isolated this time around because of our robust fundamentals and robust domestic cues, but still it's just the entire house falling, so you can't be the left alone brick, right? So you will have to withstand that global pressure. I think the FII selling also after a long while in the month of September was negative. We had almost like 15,000 crores of outflow from the FII side, right? So it's getting tougher on the global macros, and that's what is hurting the markets. Domestically, we can always say that there's nothing much negative which is coming out. Crude, yeah, it's been around 95 plus kind of a level. It's again cooled down to around 90, 92 odd levels, which will remain a story which all of us will have to track very closely. Anything upwards of 95 or touching about hundreds is extremely negative for India. Even at 90 levels, we're not that comfortable, but yes, we can kind of sustain, right? So I think crude needs to cool down, and the global factors have to be a little more benign for us to now make the next move.
Now, Mohit, October generally has been a positive, historically speaking, has been a positive month for the market. Just want to get your outlook on the October series. Do you expect Nifty to, once again make a dash towards that 20,000 mark?
Suyash, it's extremely difficult to call this one out because look, we have the impending MPC right now, and by all means, I think RBI should keep the rate intact, and that's very well factored in the markets. But the global cues, as I said, are not very benign and positive, and are not looking good for the entire emerging market pack per se until the results season surprises us dramatically on the upside, right? That could be the only trigger to my mind. But I really doubt that we can have a very big surprise coming out of the earning season this time. We will be mostly in line with the expectations, and few of the sectors might come a tad below the expectations also. So my sense is it'll be a wait and watch month. Will continue to hover around in this range. There's nothing very significant which can break the market down also, but positive triggers are hard to find by.
Now, Mohit, as you said, earning season is going to begin next month, and the first to come out with their report card, the Q2 report card, as always, will be the IT companies. Now, over the weekend there was a report from Nomura which said that IT sector could disappoint on both margin and revenue front, given the delayed client spending, especially in the small size and discretionary projects. Now, this is something that we've been hearing for at least the past few months. I just want to understand, in your view, what companies, I'm talking about the large cap companies, who could post a better set of numbers from what the street is expecting, and who could play a dampener this earnings season?
Look, Shwish, IT per se has been struggling for a while now. In the entire Nifty pack, I think IT has been relatively the worst performer. This thing, the large cap IT pack, the mid cap ITs have been soaring, and they've been doing relatively quite good and fantastically well. But the large cap pack, especially the big three and the big four names, they've not been able to outdo the expectations of the street. And I continue to believe that that pressure might sustain for a quarter or so, till such time that we see US and the larger economies stabilizing, and perhaps a bigger indication of the rate cycle reversing. We will see the IT pack continue to struggle. But the moment we have an inkling of the rate cycle reversing on the global front, which is the US Fed starting to reduce rates, that's when we can have a positive trigger on the IT pack per se. But I continue to see that the larger IT names will be under some pressure to give a positive guidance from here on.
Now, Mohit, JSW Infras, listing was today, and it has listed, in fact, at a premium of about 20%, which is pretty much in line with what the market was expecting. Now, given the current price at which, I mean, the stock, the price band at the upper end of the price band of about 119, it was, the valuations seemed fairly reasonable at about 29 price to earnings, compared to Adani Ports 33 or 34 price to earnings. Now, at current juncture, what would be your advice to investors who are allotted shares? Should they book listing gains, move out the stock, keep holding it? And also for the new investors, can they get into the stock at this point in time, or should they wait for some correction?
Suyash, again, we don't have a very large coverage out here. Just from my little bit of reading on this one, I can say that, look, honestly, I think the stock is up somewhere around 25 to 30 odd percent in this trade today itself, right? And that's a good listing. The entire pack is buzzing with order books flush for every second player in this pack, whether it be infrastructure, whether it be construction, whether it be real estate, whether it be electricity, transmission, ancillaries. All these kind of sectors are actually buzzing and hot right now. For a new investor to come in and get into in any of these sectors, not just this name, I think will be a very tricky call right now, honestly, given the valuations and given that these valuations are solely based on some order books, right? We don't even know the execution capability. We don't even know how those things will pan out for next 1 or 2 years, and we don't know how the macros will shape up. So my sense is it's a wait and watch scenario right now for the new investors to come in. For the existing ones, if they have a fairly long term horizon of around 5 years and above, then perhaps yes, it's a hold. But for someone who's looking at a good, neat, handsome 25 to 30% on gain, I think it's not bad to take it off the table.
Now, Mohit, I also wanted to get your view on the paint stocks. You know, a lot of them have come under pressure. Including the likes of Berger Paints and Asian Paints. Now, one of the reasons why the stocks were trending downwards was the spike that we saw in crude prices, which was threatening to break past the $100 mark. Another reason was the potential entry of the JSW group and the confirmed entry of Grasim, which is expected to enter the business by the fourth quarter of FY24. And from reports, it seems that it is aiming for the second spot. So, in light of all the the movement that we are seeing, once the dust settles, who do you think will emerge the contender for the top spot, and also what will be your preferred pick in the sector?
Well, look, Suyash, out here the call is extremely clear. The market leader is a leader by a fair bit of margin, right? So Asian Paints has been leading the pack for a while, and in terms of the quality of management, in terms of the way they have adopted to technology, the way they have ventured into new segments, and the overall longevity of the business and the brand value. Honestly, I think it's a long way up for other players to catch up with them. Berger is a close second. For the new entrants, it's a very highly competitive market. It's not just the organized branded market, but the unorganized market across the India is extremely fierce and competitive. There are a number of local regional players basically whom you have to contend with. My sense is it will take a while for the new players to establish themselves, and I continue to see that the top two in the market will continue to remain in the leadership position for a long while to come. I think the festive season is around the corner. We should see some good demand uptick, the kind of consumption driven stories which we are seeing right now, and the kind of demand which we are seeing. I think that that's fairly robust, right? The Indian household is out there to spend, and my sense is these stocks, because of their valuations, perhaps are seeing a kind of dull period. But on a fairly long term outlook, these are very good positive stocks to hold in one's long term portfolio.
Uh, okay, also want to get your view on the consumer durable pack, especially the electronic consumer durable pack. Now, they have witnessed a sharp valuation correction in the past, 1.5 to 2 years due to weak earnings, which was primarily due to technology driven valuation erosion. Now, with the, as you were saying, with the festive season and the wedding season coming up along with the the kind of rebound that we are seeing in the housing sector, what's your overall outlook in the of the electronic consumer durable sector, and what will be your preferred pick among the likes of Havells, Orient Electric, Crompton, V-Guard?
So if we've seen a massive run up, right? So we have seen a massive run up in Havells, in Polycab, right? Those are stocks for last 2 3 years. They've given tremendous returns, and people who have been invested in this, I think they've reaped the larger part of the benefit. My sense is the cream is off the table, and now one has to be a patient investor for one to reap rewards. However, I continue to believe these are all very small sized companies, right? There's no large cap or mega cap in this segment in India as of now, and there are a lot of new players who are entering it. We just recently saw the listing of RR Cable, which again is a very dominant player in some markets, and has an extremely strong fundamentally driven balance sheet, right? So there are a number of smaller players. Uh, I would look for us to significantly up the bat on this one. You have to really back the leader, and it's not very clear as of now who the leader will be in next 2 3 4 years. My sense is smaller bets spread across these 5 6 or 4 5 good quality names, and then one has to wait and watch as to who turns the table around and becomes the bigger name out of the entire pack, and one has to keep backing that bigger name to capture a larger share of organized market, right? And you are seeing the transformation in the country where the inorganic market is moving towards organic branded players across all these segments, whether be furniture, whether be lighting, whether be the tiles, the granites, the electrical equipments, anything and everything which you see, the market is moving towards organized branded players, and lot of unorganized share is being captured by these players. So one has to wait and watch as to which stock really turns the story around and becomes a large cap. In India, we still have a long way to go for these kind of stocks, but I think, yeah, these are all very positive stories to capture.
Okay, all right. Let's also quickly take a look at stocks that we are tracking this morning.
Yes, Shweta. So let's start with Vidanta first. Now, on Friday, the company announced the demerger of its businesses into 6 listed entities, which will be Vidanta Aluminium, Vidanta Oil and Gas, Vidanta Power, Vidanta Steel and Ferrous Metals, Vidanta Base Metals, and Vidanta Limited. Now, Vidanta said that it's going to be a vertical split, meaning that all these companies will become standalone business and a pure play business, and every shareholder of Vidanta will also get 1 share of each of these 5 listed new entities. Now the stock, Shweta, as we saw, on Friday ran up about 7% or so. Today also it's up about 2.5%. Although on a year-to-date basis, the stock has been an immense value destructor for its investors. It's down about 27% or so. So,
Mohit, let's quickly get in Mohit to before we move on to other stocks. Mohit, a sharp volatility we've seen in Vedanta stock over the past 1 week. It's been in the news one way or the other. How is the demerger likely to impact the stock performance, and will it now finally start adding value to investors?
Exactly, because Vedanta share promoters are saying that it will unlock value for the shareholders. We just want to understand how, given that it has such big debt on its books right now.
So look, Shweta and Suyash, I have a very core belief in stock markets that you need not be tracking and investing in every sector and every company. And few of the stocks, the stories are so muzzled up and the stories are so complex that one has to be really deep into it or has to avoid it. And I think Vedanta is one of those stories. Honestly, I shudder to enter into this territory where I can't understand the real intentions of the management, and the real path forward also is very hazy to me. It might sound very good that they have done a vertical split across their businesses, empowered each business unit, 5 different verticals, will unlocking value, and all is very fine. But look at the history of the company, look at the history of the management for last 3, 5, 10 years. It's honestly, to the retail shareholder, I don't think so they have really made enough money or they have given enough on the table ever, right? So the promoters raised stake 2 years back, then declared a huge dividend and then reduced their stake, and now they're demerging the company, right? So anyone who was entering the stock by virtue of a high dividend yield for last 2 years, I think that story is over. Will the business units fetch independent value, and could few of the businesses be hived off to pay the debt? I think only time will tell. Even the restructuring story will take almost like 12 to 18 months to actually fructify. If at all it fructifies, there are a lot of approvals required and a lot of things required. Out of the entire pack, I think Vedanta Aluminium is one company which still has a lot of value out there because of a lot of backward integration in the entire chain. But again, as I said, you need not be invested into every stock, and it's virtually humanly impossible to track every sector in the market. This is one sector and one stock where I will always keep, which I will always keep away from.
Now, to Mohit's point, Shweta, there is a little, some news or reports that, Vedanta could perhaps look at selling some of its assets or some of its businesses, in an effort to pay back the loan. And, the $2 billion payment that is coming up by the end of FY24 will be a big problem. I think from reports they suggest that at least analysts are expecting that as far as the this payment that is coming up in FY24 end of 2 billion, it will be covered by the fundraising activities and that Vedanta has overtaken in the last few months. However, it will still need to sell some of its businesses, probably to perhaps pay off some of the debt, which has been a big concern for the company. And Mohit, I also want to talk about Hindustan Zinc. Now, there is also news that Vedanta could be looking to restructure Hindustan Zinc and list the silver business separately, the zinc and the lead business separately, and the recycling business separately. Now, I mean, Hindustan Zinc is a fully integrated company where we are seeing that, I mean, zinc, lead and silver are a byproduct of zinc, and hiving off the businesses separately will, I mean, lead to a rise of related party transactions. So what is the thinking over there? Why are they splitting up Hindustan Zinc, which seems to be a fully integrated business, has been a cash cow for the company?
Suyash, look, as I told you, it's extremely difficult to actually figure out what the real intentions of the management are behind all this restructuring. It sounds good on the face of it, that value is being unlocked and businesses will independently be assessed in the public scrutiny. However, I see there is more behind the curtains out here, and we will only come to know of it in next 12 to 15 months. It's not just the debt which is maturing in FY24, but in FY25 itself, they have almost another 2 to 3 billion odd which is maturing. So the total debt which is maturing over next 2 3 years is upwards of 4 billion, right? So which is a massive number, and it all goes to show that how the whether this restructuring will actually help the company to pay off those debts. I honestly don't know, right? Management has to come out and give us a path that how the entire debt will be paid out and how this restructuring will actually be fructified and be useful for a few of these companies. As you rightly said, Hindustan Zinc, it's very difficult to figure out what these entire three businesses will do separately, right? So again, as I said, it's not important in stock markets to
Okay.
be everywhere and in every stock.
Also tracking auto numbers for the month of September. Major auto companies like Maruti are in the news.
Yes, so Maruti, their half yearly sales have surpassed the 1 million mark for the very first time. Although, I mean, on month basis, the growth has been rather muted. I think it has logged a growth of about 3 to 4%. Now, the stock was trading down the last time I checked this morning. Another reason why the stock perhaps is under pressure is because CLSA over the weekend, retained its sell rating, although it has revised the target price upwards to around 9,400, but it still implies a downside of about 11% from Friday's closing. Now, the reason why CLSA has a bearish outlook on the stock is because even though FY24 was a very good year for Maruti, when FY25 kicks in, it does not have too many launches coming up. I think Maruti only has just one SUV in the pipeline, whereas Tata Motors and Mahindra have 4 or 5 vehicles in the pipeline.
Mm-hmm.
And I mean, if we look at the returns of Maruti Suzuki touched a 52-week high last week, so perhaps there is some profit booking taking place. In the course of 6 months, the stock has run up about 25%. Mohit, how are you, I mean, judging the stock on the price charts right now? Is it a hold, buy, or a sell?
Is fully priced in at these levels. Honestly, I think market was expecting better numbers in terms of the auto sales being reported. The numbers are a little muted in comparison to the expectations of the market. However, yes, they have touched a new record of over 1 million units for the half year for the first time. But overall, Maruti is losing in the premium segment. Maruti is losing its share in the EV segment. So there are a lot of pockets to be for it to catch up, right? And I think it's also been losing the market share of late. So my sense is it's an uphill task to maintain that market share for Maruti. It's been a market leader for a while, and market leader always has a tough job on the hand when the competition is so fierce across diverse players and new launches are rampant. As you rightly said, Maruti doesn't seem to have anything up its sleeves as of now, which can really entice the market or tempt the market. Only thing which is yet to be seen is the festive season, which has kicked off, and for next 2 3 months, I think how the demand will come through and what are the number of sales and everything will be keenly watched by the market. But as of now, I think the stock is fully priced in at these levels.
I also want to get your view on the two-wheeler pack. Now, TVS Motors and Hero MotoCorp have run up significantly. Even in the September, the monthly sales report card, I think they have outperformed the market, whereas Eicher sales have shown a degrowth of about 4% or so. So, the entire sector is shifting towards premiumization. So, who do you think will benefit from that shift? And I mean, if one were to invest in a stock of a two-wheeler company, which one would it be according to you?
Look, Suyash, I think Hero MotoCorp has its own struggles to deal with. They command almost 44% market share, and the market share has been declining. They've declined, it's almost declined by 3 to 4% in last 1 year odd, right? Their newest launch, Charisma, is yet to pick up. I think what they've announced is a price hike of around 1% odd across all their brands. And I think Charisma will also see a price hike of around 7 to 8,000 rupees effective today. So my sense is, let's see if how does that entire thing pans out. But I think they are struggling to retain their market share, and they're also struggling to enter the premium segment, which is extremely well captured by Eicher Motors. Right. So Eicher Motors, I think, has been a dominant player for a while, and continues to be one power to reckon with on the premium segment. And the motorbike market in India is moving gradually towards that premium segment. Right. The lower end segment is more moving towards those. EV two-wheelers, the autos, and I think out there the likes of Bajaj Auto are the ones who are really gaining market share, and are the ones who are is one stock where I'm keenly watching the growth trajectory. I think that's one which stands out of the entire pack.
All right, Mohit, thank you so much for taking time out. Appreciate you joining us this Tuesday morning. We'll keep coming back to you too, Suyash. Thank you for the lowdown.